All right, we're live. Let me test this out just to make sure. Test this out. Yeah, just perfect. All righty. So today we're going to talk about trading. I got a mentor, a fellow friend in the space, but we're going to be talking about trading. I want to get into options trading. We're not going to talk exactly about options trading. We're going to be talking more about technical analysis. I would say the way that helps you make a better decision, if anything. I have Dollar WIL here as a person that I believe to be a mentor of mine in the space. Back in 2017, when I was going crazy with cryptos and I thought I knew everything and I knew what I was doing, Dollar WIL was the guy that says, whoa, hold up, slow down. Take some money off the table, know when to get out. Also, technical analysis will put you in a better space all around, just so that you can actually make a better decision. I didn't listen, and the market taught me. So when they say, a smart person learns from their mistakes, I'm pretty decent at that. But a wise man learns from others. I'm getting better at that part. So I want to introduce Dollar WIL. He's on YouTube here as well. His channel is in the chat, in the description, and it will be in the chat. His Patreon will also be in the chat, so you can follow him there. Definitely somebody that I support, and I'll continue to support in any way, shape, or form. And for my little audience, I want to introduce you to Dollar WIL. Dollar WIL, tell us a little bit about yourself, please.
What's up, everybody? I'm glad to be here. That story that you told about how you came to appreciate technical analysis. I think everybody has a version of that. We have to feel the pain first. I call that pain the stupid tax. We got to pay that tax first, get slapped before we realize, wait a minute. Okay, so the thing that everybody is mostly saying is flawed. Okay, all right. Now, okay, I paid the price. I want to listen now. So tell me again.
Right.
How does this thing work? Let me. I'm not convinced, but you got my attention, and that's all. Right. That's all I ask for. Give me an honest chance. Come over, hang out. With me for about 30 days. Because it's not I can explain it, but you have to see it to believe it. Because as I explain in real time what's going to happen in the short term, and you see it happen too often to just cast off as chance, or luck, and then people start paying attention and go, whoa, okay, there's something to this,
Yeah, it actually makes sense, especially when if you're a visual person, or if you're a person that goes by the numbers, all of that is within technical analysis from what I've seen. Now, I'm not a person that really does a lot of technical analysis today. I do look at charts and things like that, but getting information from somebody like Dollar WIL, and he looks at it and says, yo, this is crazy. Yo, this will blow up in your face. Or, hey, you got to look at this and look a little bit deeper. Start looking at some of all the other tools that are in it. It's invaluable information.
Yeah. When we say technical analysis, for people listening, there are two main, let me say philosophies about how a financial asset is, how they are evaluated. That could be a stock, a mutual fund, an ETF. It could be Forex, futures, anything, a bond, anything. If it's on a price chart, technical analysis can be applied to it. The two camps are main philosophies, and sometimes you might catch us arguing across these party lines, if you will. The one side is the fundamental analysis, and what fundamental analysis seeks to do is to differentiate the good quality companies, high quality companies, from the ones that are that don't have such a strong or business model or reliable earnings. So and I sometimes you'll catch me bashing fundamental analysis, but mostly my criticism is how people misuse it. It's not, I don't have a problem with fundamental analysis if people use it the way it's intended to be used, which is what I just said, to differentiate good companies with sound business models with a real solid underlying business behind that stock. And so fundamental analysis is good for that. Fundamental analysis is good for if you're comparing two companies that are in different industries, and there's really so like a company selling semiconductors and a company selling furniture, it's like, what does one have to do with the other? Well, you can use fundamental analysis to look at the earnings and growth rates and debt ratios and things like that, to look at the management behind the company. And you can even get some information about the industry itself, earnings coming into the industry and all that. So fundamental analysis is fine if you want to know what's a good, strong company. However, there's another way to look at things, and that's the technical side. Personally, I generally speaking don't buy individual company stocks because I'm to be frank, I'm lazy. I don't want to do all that research about companies. Okay. I don't want my money to be exposed to the CEO dying, the CFO stealing money, class action lawsuit. I mean, something company specific that could just blow that company up. I don't like being exposed that way. I use technical analysis and I study industries. See, money moves from sector to sector. Mm-hmm. And then within the sectors, you have industries. And within those industries, you have the individual companies. And so I purchase ETFs that are focused on whole industries. And so instead of buying the company, mm-hmm. I buy the whole industry. So if the economy is favoring that industry, and I buy the whole industry, then I'm going to get a lot of the gain of that whole space, but I'm not exposed to something that's company specific, like the examples I mentioned. Now, the high flying companies will often outperform, and in some cases will outperform, say, my ETF.
Okay.
So
now mm-hmm. that makes me ask. First off, like, what is technical trading? Like, if you can give us a definition.
Thank you. Yeah. See, yes. Okay. So I covered fundamental. So technical analysis is everything. It's contained to a price chart, period. It's nothing outside of what your eyes see when you're looking at the way the price moves on a chart. So there is a very structured way that prices move on a chart. Mm-hmm. And until you're taught that, it just looks random to you, until you're taught that it's not random, and someone has to actually prove it to you, and then you go, okay. So basically, if the stock market is like a popularity contest, think of it that way. People for all types of reasons will buy a stock, and when the demand is great for the law of supply and demand applies to the stock itself. The stock itself is a finite resource. Okay. So when a lot of people want to buy a stock, which is a finite resource, as that supply gets small, the price rises. The demand depletes the supply and causes the stock price itself to move. And it causes the price to go to these crazy levels. And so that's the nature of the stock market, that prices they overshoot in both directions. When times are great, the price goes up too high. And when times are bad, the price falls too low. So it's extreme, it's erratic in both directions. And so in technical analysis, we study that movement, and we study the demand for the stock. And so there are keys or tells and how this price moves on the chart, which tells you when that trend is getting exhausted and when it's likely turning around.
Now, would it be too far of a stretch for me as a person that does computer software development, web development? Would it be too much of a stretch for me to say, oh, okay, this sounds like it's pattern recognition? Like, is that
That is a very much a part of it. You'd be exactly right. There's certain key patterns that prices make, and it's not. People say, try to deride it and say, it's like hocus pocus or whatever. But if you think about it, it's really just common sense, physics, science. Think about it. If you threw a ball up in the air, well, gravity gonna pull it back down to the ground.
Mm-hmm.
Before the ball starts coming down, there's going to be a point at the top where the ball is almost going to come to like a standstill before it starts to fall back down. So there's a rate of change in this and the acceleration when the ball goes up. And then it slows down, and then that momentum has to flip and reverse and come back down to the ground. Right. Now, the ball will hit the ground and it'll bounce. Well, it won't bounce as high as the point where it flipped because the energy is dissipating over time. Mm-hmm. So if that ball keeps coming down, it's going to keep bouncing off the ground. It's going to rise up a lower amount every time. And at some point, it's just going to start rolling on the ground. Prices do the same thing. So I'm oversimplifying it for the people listening, but that's basically it. There's some science in how prices move and how they change, and some keys that they show when the direction is about to change. And so instead of researching company performance and all that, on the technical side, we know that you're really buying the price. We call that price action. The way prices move on a chart is price action. You're buying the price action on a chart. Although, yeah, you own the stock, you own the company, but you bought that stock because you want that price on that chart to rise. Mm-hmm. That's really, that's really what you want. You're just trying to share in the gain of that price moving on a chart. So, on the technical side, we cut through all the funk and just say, look, it's about the price action on the chart. So let's just study the price action and master that. And let's not kid ourselves. We're not marrying these companies. We only in it for the good times of while that stock is rising. But when the stock is falling, we don't owe that company no loyalty. We're selling. We're getting out. And when it flattens out and stops falling, we'll come back and show it some love again. But we only there for the good times.
So then that's kind of like, taking the emotion out of it, basically, is what you're saying.
Right.
Like, we can look at this. We can be, let's be adults here. There's no emotion in this. I'm just trying to get this money and get out. Like, okay. So, and that's how and does that sound like it's a good summation of?
Yeah. I mean, that's the goal. We're human beings, so we always have emotions, but that's the goal on the technical trader. And it takes many years to try to neutralize this emotions from taking from affecting your decision making, up to the point where in modern trading, more and more of it is involving automation. And so the people in your field, a lot of people in your field of computers have strong mathematical backgrounds, they get hired up by these major companies, and they call them quants. Okay, quantitative analysis. Okay, so they're doing all these mathematical algorithms that's studying the supply and demand for the stock itself, as I would explain it. And they have these computers making trades faster than any. They're executing trades faster than we can think. And so there are people in your field of computers is writing programs doing this. And so it's keeping the mark on. You might hear the term scalping and high frequency trading. That's what they're doing. And so people kind of give that group a sector a bad name, partly deserved, but because they're ahead of us. Like, so where the main computers that run the stock market, the electronic markets, these quants, these high frequency firms, they pay money to put their computer right next to the main computers that's running Wall Street. So they actually see the price before we do. It's like a fraction of a millisecond, but that's enough for a computer to decide.
Yeah, there's been reports of these high frequency traders, they'll put their data centers or
Right.
they'll put their compute power closer to, say, the stock exchange of that area, whether it be the NYSE, CBOE, or what have you. They'll put their computers close to them or as close as possible
Right.
so that they can get that fraction of a second, what's it called, leg up, if you will, or
Right.
advantage. So, going as far as like, okay, seeing the path of a fiber and taking the seeing what is the shortest path from one point to the next and actually putting their servers there, whether it costs them more or less and things like that. And then that's important from what you're talking about, because these are the same people that are behind Robinhoods that are paying for trade flows from Robinhood. And they're also getting information from us as retail traders to see where we're going to trade. So now they're getting closer to us. There's a lot into that.
There's a lot into it. And so
Yeah.
75% of the trading volume every day is this big money and with this advantage over us. Okay. So we're just the guppies. We're like, less than 20, no more than 25% of the trading. So is it rigged? I would say they have an advantage, but I wouldn't call it. It's not. I don't want to say that it's rigged, because rigged implies that we can't win, and that's not true. We can absolutely win. Okay, but can we beat them? We can have our moments. So what we try to do as technical traders, we recognize that they, air quotes, they got the power. They're the big fish and we're just the guppy. And what we try to do is watch what they do. And in whatever direction they are trading, we trade with them. We don't fight them. We ride the wave. We're just a tick on their, what. That's all we are. We're along for the ride. As long as we don't get too big and full of ourselves, think we're going to take on Goliath, we'll be all right. Like those folks that tried to take on the hedge fund firms with GameStop.
Right.
Like, we know how this story is going to end. You can't beat, Goliath. Come on.
Yeah, because it was funny about that. A lot of people were like, oh, we're doing it as retail traders, so on and so forth. And it's, if you look at the volume, it's like, no, retail traders don't do that much value. They don't put that much money in there. We don't have enough money to be putting in there compared to, say, a Michael Burry hedge fund, who's well known for the Big Short, and against some of these other hedge funds as well. So it's like, if anything, ride the wave, but after a while, you have to look at the chart. And I guess technical analysis would have told you, along with some of the fundamental issues that were happening.
Well, it would take technical analysis along with what's the word I'm looking for? Like when you calm your ego, less ego plus technical analysis to know that you can't fight that wave. Okay. Okay, fine. You tripped them up. You got a good laugh at their expense. You made the price go a little higher than it was supposed to, which caused those computers we were talking about earlier to see that volume take the price to a higher high, which made the computer go long instead of short. Because the computer's saying, wait a minute, the trend is going up. So those funds were expecting to have to short, but now they had to they had to protect their losses. Cover their shorts. Yeah. So okay, so you want a round, and I think that's about as much as you can do. But the small guy had a chance to cash in on a nice profit, and they should have. And so you also see me doing light trolling on certain, people's shows, and I hear people talk about hodling, whether that's Bitcoin or whatever. No, everything is bought to be sold. Everything. The price moves in waves and cycles. It goes up and down.
You have a great saying that's funny. It's like, ain't no hodling over here. Like,
ain't no hodling. No. We trade. That's right.
Ain't no loyalty.
And these patterns you were talking about, they exist on every time frame. So technical analysis is for the day trader, and it's also for the long-term trader. Notice I didn't say long-term investor. There's no such thing as that.
Okay.
It's either a short-term trader or a long-term trader. Everyone that buys a stock is planning to sell it for a gain at some point in time.
Exactly.
It doesn't. So what are we really saying when we say, well, I'm an investor? Most of the time when people say that, they're trying to cover up for the fact that they made a bad decision. They made a bad price entry. The thing is losing money. And instead of saying I messed up, they say, I'm an investor. It's a long-term investment. No, you didn't plan for that thing to lose money like that, for you to be upside down in that trade. You might be upside down for years. You didn't plan that.
Oh yeah, for years. And that sounds like people that bought Bitcoin in 2017, 2018 at its high, and then of course lost half of the value a couple weeks later, and then had to wait now 3 going on 4 years just for it to get to another all-time high, surpassing what it was before, and then keep on reaching even new heights up to the $50,000+ mark, which is what we had recently and will be seeing again, possibly. But and then people are buying now even at 15 or at 50 grand. So it's like, expecting it to go to 100 or even more than that.
See, on the technical side, I would say the mature, responsible, more experienced technical trader would just fess up and say, I made a mistake. I was complacent and lazy and lack discipline, because first of all, you were supposed to always have a stop loss in, and a stop loss is what it sounds like. It's a note on that position that says, stop me from losing money when the price drops below this point. And so sometimes we get egotistical. And that's for technical traders and quote unquote investors. We get egotistical and we don't put a stop loss in. And so then the price turns around and falls, and we lose way more money than we would have lost if we just put a stop loss in. And so, but on the technical camp, we own that. That we made a mistake. Okay, we did something stupid.
And I definitely want to get into that and get into like some of the tools and things. I haven't said it to you or anything like that, but I usually like to talk more about mindset. So I like the flow. I like where we're at right now and the flow we're going with. My next question is, can I really time a trade? And if so, like when? Like what's my time frame for timing a trade? Saying, hey, listen, it's going to this much here. Can I actually?
What do you mean by? Let me see. What do you mean by time?
Okay, so I think it's going to go to $10 on February, March 1st on any type of asset or commodity or ETF. Can I actually make that assumption or move or prediction with technical analysis?
Partly. Let me say this. I'm comfortable as a technical trader saying the price is going to go in the area of $10 or whatever. I'm not comfortable saying it'll get there by next Friday. Okay, because prices move up, down, and sideways. I didn't say up, down, or sideways. Up, down, and sideways. It does all of the above. Okay. So it could reach a level where it just has to take a rest, and it could go sideways for an undeterminable amount of time. Let me see. When I say undetermined, let me just say I don't know. There might be some technical trader who's got some game deeper than mine, and if I find out who they are, I'm going to try to learn what they know. But I don't know it. I'm not saying it can't be known, because I'm always learning stuff. So I'm assuming that other people are always learning things too. But let me just say, it's not commonly known and like how long something's going to trade sideways. And so we call those consolidations, because of that, or range trading, because of that, it's very difficult to say it's going to reach this level by next Friday, But I can, I do feel comfortable and I make calls quite regularly that it's going to reach this particular area, not $10.35. Okay, I'm not calling the exact to the penny.
Yeah, between $10.20 and $10.35 around this time. Is that good as?
I like to say give or take you know, like $1 or a couple of percentage points, 1 or 2%, something like that. Because just it's really no need to know exactly like that. So what I do is I use I'm an Elliott Wave theory trader, and this Elliott Wave theory's got its own methodology and ways of projecting prices and things like that. But these are areas again. Now we don't just blindly wait for the stock to hit an area, you know, and we don't just hold it waiting for it to hit the area, and we don't just sell because it hit the area. We're looking at, again, back to the price action. When I talked about throwing the ball up in the air, the price does things on the charts that tip us off. So we're expecting the price to get to this area, and when it gets to the area, we're looking at it for those signs. And I would say a good disciplined trader would, at the first sign, they would get out. See, you know, the more you do it, the more you stop trying to get the absolute high and stop trying to get the absolute low. Okay, now, because that's when, because the prices fall faster than they rise, and that direction can change, and you know, so it's just not a smart idea to try to get the absolute top. So if you can get 80% of the whole range from the low to the top, you're winning.
Okay. And that's when you're starting to look at taking profits.
Yeah.
Now that makes me think about,
when a price gets near my projected area, and if I'm seeing again, you know, I want to give away all the beans because I got a Patreon group. All right.
Okay.
You know, but as I see these signs start to accumulate, I get out. I'm not waiting for the top. I'm confident that we're in the area of the end, and that's good enough for me. I get out. I'm not, you have to learn to be okay with leaving those pennies on the floor, as what I call them.
Okay. Not being too greedy then.
Yeah, you got to get out. There's a time to leave. It's like, I like to say, you know, it's like the all you can eat buffet. You know, that's what they say, but you shouldn't try to go in there. You know, there's a time to stop eating. You know?
I like that one. I was like, that's what they say, but you shouldn't try.
Right. They say, yeah, okay, all I can eat. You don't know me.
Listen,
you don't know how much I can eat.
I'm big for a reason.
Said that.
I'm trying.
Who you think you talking to? All I can eat. You know? You know, so you can, but that's part of the discipline in trading. You know, it takes several years to change the mindset, and it's a struggle for all of us to handle the greed part of it, because even when you learn and you're able to make money, you start making a lot of money. Like, wow, and then you make a lot, but then you mess it all up trying to, because your greed takes over. You know, it's like in the Forex and futures world, and I talk about that a lot over on my Patreon. And so as people start learning this and they see, you know, wow, I can make $1,000 or $2,500 in a day. Okay. But then they end up blowing it and giving it all back. Or I'm not they. Let me include myself in that too. If you don't control your greed, you're going to mess it up. So there's a point you have to learn that, you know, the money's not going anywhere. These moves happen every day. You can't, you know, back to the all you can eat buffet. Leave some food on the plate. Come back tomorrow. You're not going to spend all that today.
I damn sure try, but you know,
you know. So, you know, it's a struggle. It's a struggle that you find. So it's a risk issue. You'll feel over time. You will learn that the particular strategy, and there are many strategies. The particular strategy I'm using, it's safe for me to go after this amount of gain, but not that amount. I should take this and just stop. And also, it's you get tired after like a couple of hours. You really should stop anyway. So when you first turn on the computer, the first hour or two, that's the best you're gonna trade all day.
Really? That's as accurate or sharp as you're going to be is kind of what you're
Yeah,
saying?
it's as sharp as you're going to be, because you're going to get tired. You're going to get lazy. You're disciplined. You're going to become undisciplined, and you're going to get caught.
So that
So
brings me to my next question, though. How important is mindset, and how long did it take you to develop your mindset? Is it an ongoing process?
it's an
Or
ongoing process. It's an ongoing process. It took me to get to the point where I can make a decent, let me say, here's what I mean by decent profit. Decent profit would be what everybody working should know what their daily wage is. You know how much you make per hour.
right.
And so you multiply that times 8. So that's the first thing when you start. If you're trading, if you're looking at, say, what's up, Lionel crypto. That's the first thing you want to do is like match your income on your job. Okay. That's so now once you accomplish that, that's really where the greed comes in, because you start making multiples of that amount. Mm. And so, and you just, it's like you want to, invariably, you're going to go to the cliff. You want to know just how much can I make? Okay. Right. And you're going to get the answer. You're going to get the answer, and it's going to fall like a cliff, and you won't stop. You can't stop yourself. So it takes a while to go through that. But that first level, it took me, I'm embarrassed. It took me years, man, because the mistake I made is I didn't get a teacher. Mm. Okay. I was a fundamental trader from, let's round it off and say 1990. From around 1990, let's put it there. Actually, no, it was soon. I was 23. Let me see. I got to do math, man. I graduated high school in 82. So I was around 22 or 23. Let's say 23 when I started trading. So that's 5 years. So that was 87. So from 1987 until 2000 and something like 2006 or 7, somewhere in there, I was a fundamental trader. Okay. And then the .com bubble. No, the .com bubble burst in 1999, and I was still a fundamental trader, and that kind of pissed me off, because nothing the fundamental camp told me, nothing in those rules told me to sell. And so that was the beginning of my red pill.
In front of you type deal.
There's nothing in fundamental, like I like to ask fundamental people, fundamental traders, driven fundamental analysis folk, well, when do you sell? What's your cue to get out? I haven't come upon one yet that gave me an answer. What they say, well, they give me an answer, but it's not a good one. What the answer is, well, if it falls, it's getting cheaper. Why wouldn't I buy more?
Right.
I'm like, wow.
That makes sense to crazy. Me as a guy that likes fundamental analysis or fundamental trading. That makes sense to me if it's a dividend producing stock and that dividend is going up. Then it makes sense to me. But
see, there's two types. There's two types of downturns. Or
hold on. As a person that looks at it, I'm like, just like you said earlier, like, when am I going to take the money and retire on it?
Right. So you have your minor pullback. Might be 10% or something. By the time you get out, it'll maybe reach back up to that high in a week or two, or within a month, and that's probably not worth responding to, So I understand their point on that, but sometimes it's different. Sometimes you have a huge correction. It could be like 40% or more. They don't happen that often, but in technical analysis, that's what we're tracking. We are projecting and anticipating where those trouble spots are, so we don't take those big hits. And so it took me to get to that point. Okay, so I moped around after losing a lot of money in 1999. It took me maybe about 2 or 3 years of moping around. And I was like, it's rigged and everything, saying all the stuff people say when they lose money. And then I decided I want to do some research. I realized that there was some intelligence out there that in the trading world and that the camp I was in, which was the fundamental camp, that camp was not it.
Right, like
I knew that was not
the other side of the trade.
Yeah, that I was not on the side among the intelligent people or the intelligent philosophy. I knew that. That's what I knew from that loss. And I knew that the fundamental method is the predominant way that everyone is taught. And I started hearing about these hedge funds and people like that. And so I stayed confused until I realized the question that I needed. You may have heard. Have you ever heard the saying that the answer is in the question?
Yes, yeah. Or to ask the question is to answer it, or something like that.
Yeah. It's like I stopped. I had to get to the point where I was looking for the answer. No, I needed to learn the question. See, once I needed to phrase the question. Once I got the question phrased, then the answer was instant.
Yeah.
Okay. The question was, who made money when the market went down, and what philosophy did they use?
Okay. Yeah, right.
It took me years to be able to get over my anger, sit down and calmly discern what is it that you want to know. Because I was the type on a Saturday, I would go to Border Books, Olson Books, and hang out there, checking out the music and the fine women, along with buying financial books. I was recording engineer, buying a mixed magazine and different things. I was a recording engineer for 25 years. So trying to stay up on my game there and, getting, like I said, trading books. And so I'm like, here I am in a store with books and magazine. And I didn't even know what type of book I needed because I hadn't phrased the question right. And so once I got the question phrased, it's like, how they say the universe opened up and started giving me like a windfall of answers, And I found online there was a group called a webpage that still exists. It's called Wall Street Survivor. But they changed their focus. The page now is nothing like it was. Back then, they had a trading competition. And in order to get in the competition, it was free to get in it. But you had to declare your methodology. Were you a fundamental trader or a technical trader? And I didn't know nothing about no technical trader. Had never heard the term, but I knew I was a fundamental trader. So I selected fundamental because I didn't know nothing about that other one. And then and they had a leaderboard where they segregated the fundamental traders from the technical traders. And so the technical traders were popping their collar that they were up 15 and 20%. And the daggone technical traders, they were up like 1,000%.
Whoa. So hold on, let me do the little channel maintenance here. First off, everyone that's in the stream, I appreciate you being here. It looks like the watches matches the likes. That's awesome. Thank you so much for that. It's about quantity, or it's about quality, not quantity, right? And right. So I appreciate those that are here that are listening. Please be sure to ask any questions. Of course, shout out to Lionel. I did my last interview was with him. That is Lionel with On Crypto at Lionel, or On Crypto with Lionel. So I really do appreciate that. And I thank everybody for joining. This is Dollar Will. He has a Patreon. Please join his Patreon. You can ask him questions there. You can ask him, hey, Dollar Will, can you look at this for me? And he will go ahead and answer. Dollar Will posts so much content and information on his Patreon. I do have the link to his channel in the description, but his channel is nothing like his Patreon. His Patreon, he posts all the time. I get the email notifications, and it's like, dang, Dollar Will posted something else again. Like, I can only look at so much. But Dollar Will is a person that gives you more bang for your buck. He is a person that looks and talks with his followers. So definitely, it's a bit of a commercial for him. Also, I will be putting a link in the chat to Artisan MC's GoFundMe. It's to save the comic shop that he actually works at, and hopefully he can actually purchase it. I definitely think it's something that you know, as a former Black business owner, and you know, a Black business owner, but as somebody that has owned businesses, brick and mortars, and wanting to not only save something that can be a viable source of income, but something that's near and dear to you, I think it's important that we support others that may be able to do that. And so I will be putting a link to his GoFundMe in the chat. Um, as far as, you know, and I leave it up to you. Research, talk to the brother about what he's actually trying to do, and then see if that's something that you want to fund. I learned about it last night, and just going off the strength of who Artisan MC is in our interactions on panels, I definitely think he's a person that I will be giving my money to as well. Well, at payday, I will be giving some money over to him. So we will be, you know, this chat is going to go on for a little bit longer, and we're going to start getting into tools pretty soon. But for all that are here, I appreciate you. Ask questions if you want. And I'll put the information to Artisan MC's chat in there right now. All righty. And go ahead and continue about that Dollar WIL. I know I interrupted.
Yeah, yeah. I was just saying, yeah, my page, my YouTube channel is kind of it's neglected because I'm a trader. Okay, that's one. So I'm like up at weird times, and when I have something to share, I go to Patreon, and by the time I'm done sharing on Patreon and trading, I'm wiped out. You know, so I'm going to post things on YouTube when like the S&P 500 is, you know, doing something major, you know, that's when I'm gonna focus on it, because I think people need to kind of be aware a little bit. Think about, you know, am I being greedy? You know, kind of maybe put up some information about how money is moving from one sector to the other, that kind of thing. But right now, but you know, when it's rising and I have nothing new to say, you know,
Yeah,
it's going up, and we see, I just leave it alone. Like this recent down move, I didn't think it was going. It's not significant, and I personally think that it's over. I think we're going to continue going higher from here.
Yeah, I hope so as well. So we have our first question by Ryan Was. What do you think about the movement, which is I forgot, it's
what does FIRE stand for?
I forgot, it's a I know it means retire early, but I forgot the FI. Oh man, it's essentially, it's people that are very frugal. They put just about, they're almost minimalist in terms of their wealth building, and putting as much money towards either investments or things that will help them to retire early. So, but hold on,
I'm all if that's the basic concept, I'm all in favor of it. Okay, anything, I'm fine. I highly support getting rich young.
Sorry, financial and Lionel helped us out. Financial independence, retire early. Thank you very much for that.
Yeah, that's mandatory. I don't believe in the idea that having people think that they need to work their entire life, you know, and retire when you're old. No, retire when you're young. And you know, this is America. You got a right to get rich quickly. Okay, there's nothing unethical about that. You know, they tell working class poor folks like you should feel like you need to apologize, or like you have some character flaw, like you're greedy or something because you want to get rich quickly. They never say that to other people.
Right.
Because you're supposed to be the designated slave or whatever, or a bottom feeder. No, we went off. We went off the plantation.
So the other part of that question is, if you had 100K in your mid 30s, how would you invest? Thanks. So my answer for that is I would invest in my mid 30s. There would be an allocation to more riskier investments, such as cryptocurrencies. Actually, I'll tell you what I'm doing right now. I have a large portion, or a decent sized portion, I should say, of my actual investment portfolio in cryptocurrencies. I expect those to do quite well into the future in the next 2 to 5 years. And with that, I will do what I call my move, or what I like to coin the move as the crypto flip. Essentially, you're taking money from your riskier assets, you're taking the profits from your riskier assets and putting them into more stable assets. And when I say putting into more stable assets, I would put into a dividend producing portfolio, or dividend producing stock. That dividend producing stock, I expect it to do quite a bit for me. So one thing that I talk about recently is Kitty, and he was one of the guys that were behind Wall Street Bets. And he was one of the guys that said, okay, GameStop is a value stock. He's a value investor, and he's looking for large returns. If you listen to him and his ethos, he talks about saying, hey, I want to make 50 to 100x on a trade. And he's not apologetic about it. And he shows you what he's talking about. And he says, hey, this is extreme. This is gambling. This is crazy. So, follow at your own risk. If he even says that, he's not an advisor or anything like that. With that, he did lose $13 million at one point on GameStop. Now, if you took that same $13 million, invested it into AT&T, that would get you about 400,000 shares. AT&T currently, their last dividend was, I think, 52 cents. So that'd be 400,000 shares. You'll get 52 cents per share. That means per quarter, you should be coming out with 200 grand plus. Off of that $13 million that he lost. Currently, AT&T, I think, is about $27 a share. And that's something, that's kind of what I would do. Now, I wouldn't put it all on AT&T. I would diversify just because I can't say that I'm a great individual stock picker. So you can put that in an ETF, or you can put that in a portfolio that is actually showing some type of improvement or showing some type of good returns. But if I had that 13 million or even 100K, I mean, AT&T would be a decent stock. And I'll let you answer here in a moment, Dollar Will, but I just want to make a little point here. So if I take that 100 grand divided by, I think it's like 27.98 or something like that is the current share price for AT&T at market close last week. So that'll give me $3,500, right? Or sorry, 3,500 shares. Then I multiply that by 52 cents. That means per quarter off of that 100 grand investment in just AT&T at its current share price, I would be looking at $1,858 per quarter. So $100,000 may not be enough, but if you start looking at things like compound interest, and you can actually take that money and have it, keep on going back into that portfolio over and over and over again. If you use something like a robo investor like M1 Finance, or even Robinhood, to a certain extent, if you still believe in them or want to get with them. I don't think they're bad. They just had to cover their ass. Liquidity matters, and people are getting really bent out of shape over that. And if you don't like Robinhood and their practices, start paying for trades, and you'll probably change your tune. So, but you're looking at $1,800 per quarter. So that's about what, $7,200 a year. And if you're looking at something like that, that's a pretty nice chunk of change. Now, if you start compounding that and buying more shares of AT&T or more pieces of, or investing more in your portfolio, then you can actually make quite a bit of money off of that in the next 5 to 10 years. So it all depends on your tolerance and what you like to do. Dollar Will, has my long-winded answer. I'm gonna drink some water, but go ahead and tell us what you would do with $100,000.
Okay. Well, before answering, let me tie back to your how long it would take someone starting now with a guide to get good at technical, to be able to, I'm not going to say be like, a powerhouse user, but to be able to get some pretty consistent gains in using technical analysis. To be honest, it's going to take about a year, at least a year, a serious study, because there's some thought processes, the way that some ways that people think that has to be changed, and then your eye has to adapt. You have to learn to see the chart. So if I'm in my 30s, am I a technical trader? That's the first thing I'm going to do, is I'm going to learn technical analysis. I'm not going to be in no hurry to invest anything. I will put the money aside, even leaving in a money market account if I had to, and I would start to learn technical analysis. The market's not going anywhere. I mean, it's always a way to make money. Something's always moving, but you have to, when you learn, you'll also learn that you don't have to chase.
So being disciplined and ignoring your FOMO, or fear of missing out.
Correct. Handle that FOMO completely. Slap it around. Choke it out. All right. And learn. Okay, you got that, because now, if once you learn, Now, what would I do from knowing what I know now? I would pick some industries. Like in this last push, I would, go with some NASDAQ, maybe a leveraged ETF. I know I'm going to have AMD in there. Apple is going to be in there. The FANG stock, Facebook, Amazon, Apple, Netflix, and Google. They're all going to be in there. And that one symbol, you can't really do much. Tesla is going to be in there. So I don't, that one thing. Then I would also maybe get an ETF that's focused on biotech. Hold on for a second. I had to hit my cough button here. So yeah, I would maybe get into like the biotech sector. I'd probably throw just a general S&P 500 in there. But again, these are just my ideas, and this is not stuff that anybody should copy. I'm not a financial advisor, and the good thing about financial advisors, why everyone, especially if you're not trained in how to trade, why everyone really should have one to at least get some basic information, because they will help gauge what your risk tolerance is. So like my level of risk is going to be different, from someone else's. So you got to be careful about taking information from people on YouTube, because their income, it could be different than yours. Their debt is different from yours. Their obligations are different. Maybe they have kids, maybe they don't. Maybe they have a mortgage, maybe they don't. Maybe they're already sitting on a wad of money and their retirement is already kind of taken care of. Maybe not. So the financial advisors want to take all that into account and help and at least give you some idea what's an appropriate level of risk for you in your financial situation. But for me, I would be right there with all the high flying stuff, and I'd be watching charts on all of it.
And that's why I like to say usually when I close out a video is if you're not taking what I say with a grain of salt, you're low on sodium. Do some research, get some more information. Don't take everything that someone says or a person on YouTube says as, the end all and be all. Like, look at it. Look at their past performance. Look at what they're doing. Even the person around you. If the person around you seems like they're always broke and they need money or whatever, well, maybe they're not the person to talk about savings or retirement investing, things like that, but if the person has just gotten into cryptocurrencies or something like that, maybe they're not the person to talk to on what to hodl, if you should hodl, or about a coin. So things like that really help, and just know who you're listening to. And then also, whoever you're listening to, don't listen to them all the time. Just research. Trust, but always verify.
Yeah, but once you start to learn, how you'll stop asking people. Really, once you learn, you won't have a need to ask anybody. So if you start learning technical analysis, go to your financial advisor. This is all in the beginning, but after a few years of reading and learning, you'll make up your own mind about if you need your financial advisor or not. But in the beginning, I think everybody needs to have one. While you're learning, you need some kind of guidance.
At minimum, have a great tax professional.
Yeah.
But did you want to add any more into what Ryan his question is, like, if you had 100K in your mid 30s, how would you invest it? I think you pretty much
I would. What I said, I would find particular industries like ETFs. Like right now, you got cryptos. You got Bitcoin. You got the marijuana or cannabis space. You got the pharma space.
Mm-hmm.
I mean, it's just so many things taking off, and later on we're gonna have like the grocery stores and the agriculture. That's gonna happen when the market flips. I think we're gonna have a top out, and maybe and a pretty severe downturn in this market. I don't know whether it's May or June, but this year. Year, but between now and then, we're gonna have a move, man. This move we getting ready to make, it's gonna make people head. It's gonna blow people's mind. This market.
So I do want to plug some of the content on your channel, although limited. you need to join his Patreon to get more in-depth stuff. Okay, putting that out there. But I know you talk about the cannabis stocks quite a bit. So if you guys look at his channel, I'll post a link. The link to his channel is in the description, and he does have some information on cannabis stocks where he actually reviews them and talks a little bit more about them. But to go into my next question, what type of cheating should you look
hold on. Let me just say this. I talk on my Patreon. I talk about what the people in the group are interested in. I got a brother who's into penny stocks. And so technical analysis can be used for everything from penny stocks to Bitcoin. Like I said, regular stocks, ETFs, mutual funds, Forex, futures, all of it, options. It's the foundation that helps you determine when you're in that area of a top or a bottom. So it helps you with entering the trade and tells you an idea when to exit the trade. So it can be used for everything in the financial, in the financial world, any and all investments.
Okay. So then with that being said, what type of teaching should we look for? Is it a course on udemy.com? Is it something on YouTube? A video on YouTube?
From zero, from the point of doing nothing, I say anything, a book. Okay, but ideally you need a guide, a human being that you can bounce ideas off, that you can make projections and make technical calls, and then they can discuss it with you, give you some feedback. A problem with there's some outstanding courses out here that people charge anywhere from $500 to $2,000, in some places charging $15,000 and $20,000. Okay, the problem with all of those courses at all of those price points is if it doesn't include a live, there's two problems. One, most of it is like a videotape or something, and you need a human feedback. You can read the concept in a book, you can watch it on a video, but you need a human being to say if you are applying it correctly. Someone has to watch you do it and say, no, you're doing that wrong. And a book or a video is not going to tell you that. Okay. Another problem with a lot of the education is it's out of context to the prices that's being traded right now. Those concepts that you're going to read about in technical analysis books, takes a long time for those concepts to unfold. And so you might read the book in 30 days, but on a daily chart, that concept is not going to play out in 30 days. So you need to be in some kind of group where people know the concepts, and you can see, you can read it in 30 days, but then you're going to live it over the next year or two. And so you'll see it happen and you'll go, yeah, okay, that's what I was reading. And so, but when you get somebody's video course, and then the thing you was reading about happens a year or two later, it's too much time between when you read it and when it happened, and you don't make that connection. And that's why the failure rate especially in the trading world, the failure rate is like 90%, because the training is so lacking. Because a lot of the trainers, we're traders. And honestly, we don't really want to be on the hook to say we're going to be hanging out with you for 2 years.
Right.
So they charge you a fee and they say, okay, you can have access to the website for a certain amount of time. And, they even when they say forever, but they might die. What you going to do? Dig them up?
Yeah, right. You said you would be with me.
Yeah. Get up. Get your A up.
Right.
You owe me.
Yeah. One more year.
Right.
Yeah. So that makes sense. So having that live feedback, having other people to bounce your information off of. Now that gets into things like, do you see any value in groups that offer signals? Is that really trading? What is that to you? What are your thoughts?
Do I see value in it? Okay, that's got nothing to do with learning. I don't. No, I think it's lazy. And if you lose money on the signal, you deserve to lose money on the signal. I hope you lose money on the signal.
Oh wow.
because I don't want, you
Tell us how
shouldn't be
you
that,
really feel about it.
yeah, you shouldn't be that daggone lazy. Learn. Fish for yourself.
Learn how
You
to do
know, it's just not that hard. I mean, it's a little challenging, but you can learn it. That person is not going to be perfect. We all going to make mistakes. Would you rather your account get destroyed because of my mistake or yours?
it. Yeah, my
You know,
mistake.
you worked hard for that
Well,
money. Nobody going to care about it like you.
yeah.
You know, so yeah, that's what I think about signal services. And there's a thin line between teaching and a signal service, and I make that very clear to everybody on my Patreon. I'm not a signal service. So I will make projections, but it's in the context of teaching a concept.
Right.
So I'm not just like, hey everybody, just like go buy and sell based on what I just said. No, I need you to show me that you understand what I just said. So you can repeat it on your own.
So then that brings us to the next question that I have. What are the tools? What are the things that Dollar Will uses? I know you put out oscillators, stochastic.
Yeah, I
You
use
know,
I
tell more about
my
it.
particular philosophy is
Okay,
okay,
what's
first of
your
all,
what's it called? What's your tool? What's in your toolbox? What's your cocktail of choice?
yeah, let me say first of all, technical analysis is an umbrella term.
Okay.
So there are many schools of thought underneath that umbrella. And the main three philosophies that I use is everybody uses them. The main one is called
Write this
price
down, guys.
action.
Write this down.
Price action. Everybody uses that. And then I use candlestick theory. But then the overall philosophy is Elliott wave theory. So there are like three schools of thought that I find most useful, and I combine them. So when I'm teaching on my Patreon, I'm teaching three systems all at the same time. And so that's a part of why it takes so long. Because these are three systems that complement each other. They fit well together. So no one system is totally complete. And so these three kind of shore up the weaknesses that each of these systems would have on their own. So it evolved over time. So the candlestick theory helps with the reversals, telling you when things are changing direction. And the both price action and Elliott wave theory, they help you define a trade, like, you know, when you're going to get in and out. They help with that. So they kind of work together. So the oscillators I use, like I mentioned about throwing the ball up in the air, that's momentum. So I use a momentum oscillator or two, and that's really it.
Okay, so with those or that cocktail or that toolbox or those tools, they help you find entry points,
Yes.
exit points as well.
Yes.
They also help you track momentum to see where trade is going, if it's
When
going.
it's slow, if it's slowing down, like losing energy, that kind of thing, which will give me a clue that, okay, maybe you want to get out right now.
That's the ball reaching a top
Yeah,
and before it falls.
correct.
Okay.
Like the ball coming almost to a standstill when it's making a transition from rising to falling. Well,
Mhm.
yeah, there's momentum oscillators that kind of show some strange stuff going on when the price is running out of steam. There's a warning sign that we get.
Okay.
So it's
Now,
all interpretation of that momentum and in the candlestick analysis, there are signs, and so that's what I discuss on my Patreon to get everybody to understand the signs, and I show it because I make calls, you know, all the time, and so they see it, and my mistakes, they see that too, and I point them to videos of other good traders, so it's not just me. They can see other traders doing the same concepts. So
right.
they know that what they're getting is like universal within
Like
among technical
affirmation,
traders.
confirming what you've already said before.
Right.
Sorry, affirming what you said before. Now, with that being said, though, um, what are some of the pitfalls that you've noticed with your action. Have you seen any cons with your way of trading and looking at things? And how did you kind of fill in those gaps?
No, I don't see any cons. I think this is it, man. This is the holy grail. This is it, man. The only con is, you become a weirdo and you can't talk to a whole lot of people because they don't know what they talking about.
Right.
You say, okay, I don't want to argue all the time. So let me just stop talking.
So
about
guys,
the
that means
people.
if you start learning technical analysis and you start really getting into it, you might become antisocial. So just fair warning.
Yeah, you're gonna be the crackpot in the group. Every time somebody says something and they want to get you to agree with it, like 90% of the time, you're not gonna agree. They're gonna think you're being contrary. You just have a completely different religion. Put it that way. They just don't. You don't see it the same way. It's like, it's red pill, blue pill. Okay.
Mm-hmm.
It's like, this is the red pill truth over here. And it's not what you see on TV. And when you learn it, it's going to be comical, the stuff you hear on TV. But it takes a while you'll hear me say some crazy stuff. And then you hang out on the channel for a couple of months. And you're going to go like, oh my God, they did just what you said. And then that's when you become a red pill.
Right.
You see it. Yeah, the wizard, you pulled the drape and we see the wizard, and it's like, oh man, it's a little short guy in the room. So it's like that. So that's like the only bad part. But I'll take it because it's real. It's reality. So, so the good part is, and I got to focus on the good, is although the big money folks have an advantage, again, it's not rigged. We can still win. The advantage that we, the little guy, have over the big guys is we have so little money that we can put all the money we got in the market in a couple of clicks. Mm-hmm. The big boys, they have to put that money in the market over time. They have more money than the amount of money being traded each day. Yeah. So they become the market if they mess up the price, the bidding on the price, and they make the price go up faster, which hurts them because then they end up paying more because they bought too many shares. So they have to buy in certain small amounts over a long period of time so that they don't make the market move up too fast. So that, because if they do that again, all they're going to do is make it cost too much for themselves. Right. So they're trying to sneak. So they got this systematic way that they sneak in these orders, and in technical analysis, you kind of see that happening. So we go in and press the button once or twice.
Filings or anything.
Say it again.
You can see it when it happens.
Say it again.
I'm sorry, but you don't have to wait for the quarterly filings. You can see it when it happens.
Right.
Oh, okay. This is what they're doing without saying and reporting it.
Right, exactly. We don't know exactly who's making the trade, but we can see a big volume spike. Also, okay, that's the whales. That's not people like us. That bar is huge. They're here. Big money's in the house now. Right. They stopped this price from falling, and they said that's enough. And so we see that go. So then we can press the button a couple of times and put all our money in, and then they put their money on top of our money. So now they're working for us.
That's an interesting way of putting it.
So that's the advantage the small guy said. And actually that came from Warren Buffett. And he said that, well, he said two things that inspired me when I was real young. He said that trading is the greatest business in the world. He said you have no employees and no inventory. I said, that's the business for me.
Wow. It's funny because you see so many internet-based or gig economy-based businesses do that. Your Airbnbs, they have the most rooms. Your Ubers, they have the most drivers or taxi cabs. I forgot the other one. There's a third one that does the same thing. But essentially, these places, they have all of this to sell you, if you will, or this inventory, but they don't really own the inventory. All they do is manage they're the go-between. They're man in the middle that's making
Right.
money a little bit off of each transaction.
That's right. And so, yeah, and the other thing that Warren Buffett said was what I explained earlier. He said if he lost all his money, he could get rich again, because he could go in and buy small and mid-sized companies, and he can put his money in and take it out faster than the rich folk. And
yeah,
so,
being a small guy, the liquidity really does matter, and that's kind of like why I like even cryptocurrencies.
right.
But that brings me to my next question. And we could stop this at any time. I know we're past the hour mark.
No, I'm good.
Okay. And it's my next question is, when do you stop and take a break in terms of your trading? Like, you're going too deep, you might be losing or something like when do you stop? Do you take a break, or do you say, hey, listen, I need to step back and chill?
Okay, I'm evolving on that. My greed has gotten, and times has gotten the better of me, and now I'm okay. I've traded different times, different windows, like when I'm doing Forex, I'll get up at 3 a.m. But when I'm doing futures, that's a 9 to 4, but I really only need to trade about 2 hours.
Really?
One to 2 hours with futures. I can get what I need. Now see, the greed will have me going longer. But I'm working on now just doing when I hit a certain price target, and that target, like I said, I can get that in 1 to 2 hours. And that's when I'm freshest. I've just woke up. I can put up a chart, and in 10 to 15 seconds, I already see the trade. I'm like really, really sharp. And my first trade out the box is usually a winner. I'm like hitting it hard. I see everything. Like my eyes are huge. I can see it, man. But as the day goes on, it just starts going downhill. So you look at your analytics. Let me back up. When I started my Patreon, no, let me back up. When I went to the technical side, I became what's called a swing trader. Okay. A swing trader, it's a kind of a broad term. You can hold something for a couple of days, a couple of weeks, couple of months, or a year, something like that. So it can be long term. Okay. But when I started my Patreon, let's see, no. A while back, I quit my job. I quit my 6-figure job, and I had a nice amount of money. Everything was nice, but the problem was in swing trading, I wasn't getting a regular paycheck, and so I saw how people in day trading, they taking down money every day,
right?
But that's a different skill. From swing. It's the same rules, but it's sped up. It's compressed. It's like what I would do over weeks or months, a day trader does within a day, within an hour or two. Okay. Because these patterns that we talked about, they exist on every time frame. And so I said, okay, I'm going to have to put in some serious effort to transition from, I'm not I don't mean to say from swing trading. Let me say to add the skill to my swing trading skill, add day trading to it. So I started my Patreon, being very honest with people that I'm a pretty good swing trader, and now I'm working on being a good day trader. And so I invited people to come on the journey with me. And so as I was learning, I was teaching them the principles from a swing trade perspective, and I showed them as I'm day trading. And so now the money is coming, the trades work. And now I'm at the point where I'm working on my discipline of cutting my trading day down to an hour or two and pushing away from the buffet like we talked about early. Because like I said, it works so well that the money comes. This is the psychological part. I never had no job where I'm making $1,000 or $2,000 a day,
Right.
2,500 a day. It takes a while to get your mind used to seeing that kind of money come in. You're gonna mess up until you can emotionally be even about that, and you're gonna figure it out that, okay, when I get to this amount of money, this is when I blow it up. Okay, so maybe I need to stop. So like I'm like getting my ego out of it and my greed out of it. And like I said, $400 or $500, probably about $500 a day replaced my former income. Why am I way up at $2,000? I could have quit and left the buffet a long time ago.
Right.
So that's my own personal fight. So everybody in this trading thing, you got whatever your discipline issues are in life, they're going to reveal themselves in this trading. Okay. That's so my blues are not necessarily your blues. Okay. So you're going to have so when you trade, you're going to keep notes on your failures. It's going to show you who you are, what your issues are. And you have to be honest with yourself and call a loss and not call it a long-term investment, and identify the problem and fix it. And I show all of that I show it on my site, my mistakes.
Right. So, I mean, Go Saints 2345 says Dollar Will is a seasoned pro, but it shows a trader is evolving and always adapting to the market.
Yeah.
And it's very true. Like, just never stop learning. This is kind of reminiscent of a question I asked earlier. Are you still learning? And then we're on, when do you stop? And these are very important mindset type questions and thoughts that you need to have within yourself getting into any market. This is why I reached out to Dollar Will and I said, hey, listen, I want to trade crypto options. Now, Dollar Will says, hey, listen, I'm not an options guy. He's very honest about it. But at least he can tell me, hey, listen, this is what technical analysis does. This is what the mindset you have to have with technical analysis. These are
and this is how technical analysis can help you as an options trader.
Exactly.
The options by definition are a wasting asset. They have a date on it. You have to be right about the direction of the trend and the price level it reaches and when it reaches that level. So it's a lot of stuff. I can't imagine being a good options trader without being a good technical trader. Every good technical trader I know, if they trade options, they're pretty good at it.
Right.
Because it solves that time element, that time wasting element. Technical analysis can help you with that. There are people that day trade options. So if you're day trading stock, you should be able to day trade options.
Now, my last two questions that I have, one is, do you focus on just one type of trade or one market? Do you limit yourself, and do you try to do as much as you can and touch many different places?
I focus on one thing at a time.
Okay.
Meaning, I might there have been, say, months where I was Forex centric. It's all in Forex. And so I apply a technique there and a formula. And so you see, okay, yeah, I can make this money. Let me run it down. $4,200 a day is $1 million. Okay, a year. All right. $2,100 a day, that's $500,000. Around $1,050, it's $250,000. Something like that, So I practice hitting like these certain levels to see what I'm good at.
That's your barometer. That's your measure.
Yeah.
Okay, if I'm making this much, then I could possibly.
Can I repeat this? Like, okay, I hit this like 2,500. Can I do that? Am I doing that every day? Or is that just like one day out of 4?
Right.
So then it's not consistent. So I'm like, okay, now the risk it would take me to get it every day is not worth it. So I would have to increase the amount that I'm investing in order to get there. I can scale up to that,
Mm-hmm.
So, so this is what's going through the trader's mind. We're trying out techniques and we're measuring the risk versus the reward.
Being analytical, being surgical.
Yes. How much is the risk involved at reaching that reward? Can we manage that? And then there's the emotions about seeing the numbers get that big. So you're not going to become, now ideally, I would like to get to that $4,200 level a day, but that's not where I am right now. I'm somewhere in that. Honestly, I'm probably at around a 1,500. I could probably do that every day.
Hey,
But
after this, I'm probably gonna need a loan. Appreciate that. Thanks.
but over time you get better at so Forex has its own personality, futures has its own personality, and so like I said, I'll focus on one for several months, and then I said, well, let me try futures, and I see what's possible there. Futures, it moves really, really fast in the morning part of the trading day. So what I like about Forex is that it's pretty much 24 hours, and the central banks around the world all have their session, and so you can find, no matter what your hours are on your job, you can find a time at some point in the day to trade Forex. I really love that about Forex. Now, futures, it forces you to be 9 to 5. I don't like that about it, but I do like that when you're there trading in that 9 to 5, the money comes real fast. So that's back to the psychology. It moves faster to me than Forex. And psychologically, I wasn't ready for that. I wasn't ready to see them big numbers come that fast, and I would lose my perspective. And so what I do on just throw this out here on the Patreon, I really push that everybody paper trade. Okay. Yeah, I don't want nobody losing no real money. Try to work out your system and your emotions and stuff. In the paper trade, you can take your real money and take what you're learning and buy some stock and do that kind of stuff. But the futures and Forex, that's as high on the risk scale as you can go.
So now, with that being said, I mean, I'm a person that wants to trade options in cryptocurrencies. I still have to do my research in terms of where I can do that, the legal ramifications of that, and things like that. But what are your thoughts on the 24/7 always there buffet of cryptocurrencies?
When you say options on cryptocurrency, are you talking about swing trading or day trading? Are you talking about buying a monthly option where you wait a month? Or are you talking about waiting a week? Or are you talking about trading intra-week or intra-day? So
in terms of the expiration date, I'd probably do a longer expiration dates because they may be a little bit cheaper, I believe. I'm still researching this, so I have no problem saying I don't exactly know.
Yeah, and my answer to you would be one, you should learn technical analysis. 2, you should get someone to really teach you options as well. You marry those two together, and you should stay entirely in the paper trading realm until you can consistently be profitable in paper. And be patient with yourself, even if you're in paper for 6 months or however long it takes. Do not lose real money. Don't pay that stupid tax.
Right.
Because if you do that, you will acquire the knowledge, but then you won't have no damn money. So that don't make no sense. So now you got the knowledge, but you don't have no money.
So that brings me into my next question, and this is the last question I have for you. Is what is Elliott wave theory? I mean, I know you talk about it quite a bit. I know it's one of the tools in your tool bag, an ingredient in your triad cocktail. What is it, and how is it important to you? How did you get to it? So it's a multi-level question there.
Ralph Nelson Elliott, I believe this was in the 30s. I could be, maybe it was the 20s. I think it was in the 30s. He observed a peculiar way that prices move. You know, they move up like 5 waves up, 3 waves down, and I'm oversimplifying it, but there's this peculiar way that prices move, and it works on every time frame. So if you look on a 1 hour chart, you'll see it. You look on a daily chart, you'll see it. You look on a weekly chart, you'll see it. Look on a monthly chart, you'll see it. And so it takes what's happening now and it puts it in a historical context for me. It reminds me that yes, today is a product of yesterday and all the days before. There's a cycle that's older than all of us. It's connected to demographics. Mm-hmm. Population got larger on the earth. We have a relationship to the earth and the materials of the earth, not just the agricultural, of course, but also the metals and minerals of the earth, which we use to build this modern civilization. And our demand, see, it gets out there. It can get out there. Our demand for these materials over time, as these rural areas became urban areas, as these underdeveloped nations and economies became mature, developed economies, they had a growing appetite for these rare minerals and metals of the earth, and the urbanization of the world has caused the demand for those materials. It's caused the prices of those things to rise, and it goes in cycles. We have baby booms and we have baby busts. We're going through the bust now after the boom, and so this is a very common thing with people with resources, and you can see people as a resource. Nothing is static, change is constant. And so Elliott wave theory takes it grounds you in that, man's relationship to the environment, the materials on earth, and our consumption patterns, and what that does to price over generations and scaling down to the now. That's the Elliott wave theory. It gives you a macro concept that's multi-generational.
Right.
Now that's deep. Now that's deep.
Yeah, so it's kind of like a way of connecting all pieces, or showing that all pieces are connected.
Correct. And there is so therefore a Trump tweet or an earnings report or some episodic event. I have the first video on my channel, on my YouTube channel. Mm-hmm. I go through about 100 years of the Dow Jones Industrial Average, and I show how I'm basically proving Elliott wave theory is correct, that news and events do not affect the stock market. Now that's the red pill truth. And you can watch the video, and I'm bringing up World War I and II and all major events like that. And I can show you that in Elliott wave theory projected that the price would rise, and nothing about the war disrupted the pattern and structure of the way prices move.
So
the World Trade Center did not affect nothing. There was the structure of that wave, what it projected to do, it continued to do it. The market was already falling before the planes hit the World Trade Center. Okay, and so it's the first video on my channel, and so I go through almost like 100 years. Now I made a projection that I thought we would be. We're in wave 3 right now. What we call the Great Depression was wave 2, and so we're in wave 3 since like 1932. Okay, so wave 3 is the longest. It's not. Let me rephrase that. The rule is that wave 3 can't be the shortest. In practice, it's usually the longest, and it's usually the most profitable. And so when the doomsday reports or announcements you hear people making, that's what they're talking about. It's called the grand super cycle. Okay, so it's a correction because these modern economies, like in Europe and America and China, we're so big, everything is overpriced. Our consumption patterns are out of hand, and it's time for prices to revert to the mean. And so we're used to talking about inflation, but the real word that nobody wants to mention, no one wants to say because it's terrifying, is deflation. Deflation, right? And that's the real scare. That's what's really getting ready to happen. You know, a year from now, you will hear that word. Maybe at the end of this year, you'll hear that word, and that's all you'll hear. There won't be no inflation. Okay, we're done with inflation is what we went through to get us here. Deflation is next.
Yeah, I always even myself, when it comes to money, bank accounts, I always go through periods of expansion, having multiple bank accounts for multiple reasons, blah, blah, blah. And then I look at it, I'm like, well, this is a mess. It's kind of like you have to do spring cleaning. You have to go through a moment of contraction, a moment where you do some cleaning and simplification so that you can consolidate. And it's like, okay, once you've consolidated, now it's not the same consolidation as the last time. It's a consolidation and a little bit of a cleanup, if you will. Even when I write code, I write it dirty, nasty. I just need it to work. Then after that, I try to make it a little bit fancier, eloquent, probably making it to where it can scale. I can reuse pieces of code. I can have modules or pieces. You know, I can reuse this one little function 100 different times, as opposed to making this function only work once. You know, like that's kind of one of the things that I look for, and I do myself.
Dude, let me just throw this real out here. We're in a pandemic. Mm-hmm. Most of America is relying on stimulus checks.
Right.
Housing prices are up and rent is still too damn high.
Right.
That does not make sense.
It doesn't.
But it's going to make sense, okay? Oh. It's going to, because the prices are going to come down.
Right.
It's going to make sense because it's going to change. It's going to correct, okay, air quotes. It's going to correct. It's fitting to make sense. It's going to hurt. It's going to hurt. But this is not real. This is not normal, and whatever you call it, if this is the normal for now, it can't last. It's totally illogical. Right. And so people are wedded to these price levels. They're happy when they see where the stock market is at all-time highs. It's going to go even higher. This doesn't make sense. Okay, but there's a certain level. In Elliott Wave theory, we're gonna get there, and it's going to correct. And then when the prices drop, that's going to make sense. But we're going to complain about that because we've accepted this as normal. This is not.
At this point, do you see that the economy, the market is lagging behind your current logic, or you're lagging behind what you think is going to happen?
The mistake is mine. So the wave is not completed yet. It's still running higher, but it's not. It can't keep going up forever. Like I already told you, I think we're gonna hit that top. Maybe by May, June, or something like that. We're gonna hit it this year. This last leg up, we're doing right now. I think this is not the final. Let me not say May, June. We have a pretty severe downturn coming. That's not really it. It's going to take us back to the breakout, let's say from February of last year. Remember when we made that big decline in February of last year?
Right.
And then we recovered. We
got to the market.
Well, we recovered from it, and now we're like north of that. Well, we're going to go back. We're going to have what we call a retest of that area, but that's not the big decline. So let me withdraw the May, June, because we have a mini decline before the big decline. And that mini decline is a retest of that high from February of last year. And then we're going to rise even higher. So I don't know how long. Again, I can't tell you how long that's going to take. I should not have said May, June. I don't know how long, because the momentum could take off, and at the end of trends, prices start moving at a faster rate than they ever had before. So we're going to start seeing 2 and 3% days normal in a row, and it's gonna blow people's mind how fast this market takes off, and that's normal for the end. That's like, it's the climax. Okay. Hate to make a sexual analogy, but that, right after that you lose interest. Okay. And so
right, yeah,
that's kind of what this market's getting ready to do.
we're gonna call it the post bust clarity, post bust clarity.
Right. So we got a nice little decline coming. We're gonna retest that area from last year, that high that we've exceeded. We got to have a little pullback. Then we have one more surge up after that to a higher high, and that could be it. That's likely it. I mean, it's gonna be ugly.
So that makes me think about.
So the shame is we got a lot of people that's nearing retirement. If they don't start learning something, if they don't get their greed in control, if they don't have a concept of when they're gonna sell, it's gonna be, hey, they're not gonna retire.
So that brings me to another thought of mine with a trade that I call my YOLO move, where I put in about $6,000 or so between cash and borrowed money. I put about $6,000 into the cryptocurrency space. So far, it's done well, but that's also based off of a very speculative prediction that Ethereum may go to about $24,000 or $24,000 by the end of 2021. But I say that because of what you just said. It's like, whoa, this is kind of lining up with what I heard maybe about a month or so ago. A gentleman by the name of Aim Stone. He has a really good channel that's crypto focused, and it was the reason why I believe what he said is because back in early 2020, around February, March, Ethereum was about 200. I bought 5 Ethereum at the time. And then he was like, this thing's going to $1,000, just based off of what he's seeing and recency bias and, past performance on the chart and past performance during certain cycles or what have you. And sure enough, it did it. Now it's up to, it got up to 2,000. Now it's falling down.
Is this gentleman a technical trader?
I would say somewhat a technical trader, but he mixes the two. I'd say he would mix the two because he does go off of quite a bit of fundamental analysis. The person that made the prediction of $24,000 is a macro trader, Raul Powell of Real Vision TV, and they are they're a financial channel that kind of gives information to retail investors like us on the free side. But they also offer more information towards macro events and hedge funds and things like that.
Yeah, but, I'd have to know what's their ideology they're using. So it's like if someone makes a projection and they're not a technical trader, I don't pay anything. It doesn't mean anything to me because it's like I want to know, what are you using that on? What are you basing that on? It's it's not enough of a foundation, but you can look at a lot of us technical traders on our site when we're calling a top for Bitcoin and that kind of thing. You're going to see a lot of us saying us very close to the same thing. Yeah, because we're all using the same methodology.
I'm going to put that video right now in the chat. This is the video that I was talking about. You can look at it for yourself as well. It says Raul Powell is loading up on Ethereum. ETH price target is 24,000 in 2021. Again, highly speculative.
Yeah, I'm gonna watch it. And then I'm gonna look into them.
Because what he said about Ethereum was actually fairly spot on. I don't remember the exact time frame, but it reached the $1,000 mark, and I was like, "Holy crap, it did it!" And then I even told a friend, and he was like, "No, it's not gonna do it." And sure as shit.
Well, I'm gonna watch the video and you know, you and I we keep in touch. So I'll be sending you my chart of what he's talking about to see if you know, I'm gonna apply Elliott wave theory to it and see what I come up with. And if it's the number that he came up with, then we probably using the same methodology.
And definitely that would be something great that if you can post it on the Patreon. And for those that are listening, and that'll be the last question that I have for you on this. And if you want to make any closing statements, let's do so. But if you can pose even that write up, if you will, I really would appreciate it on your Patreon. I could see it there, and then those that are actually listening on this live stream, that they can go over to your Patreon as well, which is on the screen right now. As you can hear from Dollar WIL and what he said, he's somebody that's experienced, but he's also somebody that is humble, or somebody that's honest enough to say, hey, listen, he's still learning. He's still getting into things.
Right.
I'm
not a rookie now. I'm not a rookie by a long stretch. It's just that you will grow in this field for years. You're not going to know it all. But I just like inhale a whole lot of information, looking for one little kernel to make my game that much tighter. You know, like a musician like a drummer stealing a lick from another pro, you know, just like that one little thing. So yeah, I got to get that, you know. And so I'll like watch 8 hours of like boring stuff that I already know just to find like one little thing that somebody might do better.
That's the truth, because it's like you look at stuff that's going to refine your knowledge and also solidify your knowledge as well. Like it's like, okay, maybe I'm losing focus. Maybe I'm getting off track. I don't want to get derailed. I'm kind of tipping over, you know. But you know, it's something that will definitely help you affirm and confirm your own thoughts, and then also check your biases as well.
Yeah, because I used to see people making like $2,500 a day doing futures, and then I got to that point where I could do it, and you know, I could, you know, but not every day. But so then that's why, you know, you keep notes to see exactly what trade was that. Again, these patterns repeat. And so you say, okay, so it's this particular pattern. All right. So then the discipline comes in if you can learn to just wait for that. Like, don't trade. Just wait for that thing that pays well, that you also trade well. You play to your strengths. You identify what your weaknesses are, and don't do that no more. Don't do that no more. Just do the thing you do well.
I fucked up. Make sure you don't do that anymore.
Yeah, it's fine. But this pattern over here, I'm real good at that. Okay, well, it happens several times a week. Just trade that.
And and honestly, and I was thinking about that too. It's like there's no shame in that. You don't have to be a jack of all trades.
No,
you don't have to be a jack of all trades, master of none. How about you be a master of one and make all your money there? Some people only trade cotton as a commodity.
Right.
Some people only trade, you know, pork bellies. Some people only trade gold and silver because they know how it moves.
And
if it doesn't move as predicted, then they chill, sit back, watch, and learn.
And I show on the Patreon that it's no such thing as that trading this is better than that. You can get paid on all of it.
Yeah.
But you can't get it all. You can't back to the buffet. You can't eat it all. So, you know, you gotta, you know, pick one, get some discipline, get a strategy, get some discipline, and eat. And the only other final words I'll say is get some training, get some learn technical analysis. It will do you well. It's a skill that you can pass on to your child. You can, you know, keep them out of your pockets. When you get old, you know, you can have your child, you know, they can be rich and you'll have your own money, but you can keep them out of your pockets. So it's a skill that we can pass down, and it'll change your life. It really will. I mean, everybody, I know that sounds, you know, hyperbolic or whatever, but
there's some truth to it.
Everybody that I've taught it, they said, yeah, it will, because you will see that there's always a daggone bull market somewhere. Always, you know. So Bitcoin is just the thing that captured the attention of this generation. Fine. Whatever gets people to the party, fine. In my generation, it was the internet and the .com bubble. Any .com made money just because it had .com. Companies that weren't that any let me rephrase that. Any stock of a .com company just went through the moon, even when they didn't have a product, hadn't made a penny. But that mania got a lot of people interested in stocks, and so we see that the cannabis and the crypto is getting this younger generation in. So that's good. Now, the bad news is that hodling is going to cause them to just get destroyed. And then they're going to go through their anger, and then hopefully they'll remember, wow, Dollar WIL said I need to learn technical analysis. I think I'm ready to learn now. And so then they're young, so they can recover. They can pick themselves up and learn, and then they'll catch the next one. But and for people listening, I'm 56 years old. If you are approaching retirement, you need to learn this technical analysis, because if you don't learn this, you're not going to retire. Okay. And for everybody listening, my final words is we're at a dangerous time, a volatile time, a most profitable time probably you ever experienced in the markets. You need a financial advisor on your team. So take advantage of that. Like some banks and credit unions offer that kind of service. Take advantage of it. Find one, and you need that professional prudence. Okay, telling you how to protect what you have. They're going to get you diversified properly in some stocks and bonds. And this is not a time to be greedy. This is really a time. Now, if you're older and you go to a financial planner, they can keep your retirement on schedule. Okay. They can help you not take like the full body shot that's coming, and so yeah, get that help.
Well, Dollar WIL, thank you so much, and I appreciate your thoughts. And I know for some people it sounds like some infomercial to plug his Patreon, but the biggest thing is we have people in our community, we have people online that are there to help us, that are here and to give us their knowledge. Sometimes on the free side on their YouTube channel, but sometimes you have to pay a little extra just to get a little bit more advice in terms of mindset. Get to talk to somebody that has more experience, or listen to somebody that has more experience, and interact with them. So for everybody, I appreciate you showing up here.
And man, my Patreon is almost free. It's $10 a month. That ain't no money.
No, definitely not compared to what I used to pay for stuff. And you know what I'm talking about.
Right. Right. Definitely.
But you pay a lot. You pay a lot more for your entertainment, and you can get more bang for your buck by messing with Dollar WIL and messing with some of the other people that are on YouTube as well. This information is out here, and this information is free. Even if it's just, okay, I'm going to get what information I need to learn from somebody, go ahead and get that, pay for that.
And I identify a ton of free information. I'm always about the free game, but you got to pay me the $10, but I'm going to show you the free.
Hey, listen, sometimes you got to pay for a Sherpa or a guide just so you can scale that mountain.
That's right.
Good point. So with that, I'll say goodbye and good night. And I thank you all for listening. And then for those that are catching the playback, I mean, definitely join us for the next interview. I know I'm not really too good, and I'm getting better at this YouTube stuff. But, hopefully I can produce some content that will assist all of you in some way, shape, or form. And as I always say, this is if you're not taking this advice or information with a grain of salt, then you're low on sodium. Please, talk to people that know a little bit more. Talk to people that you can trust, and talk to people that will actually help you make sure you can reach your goal of a MGTOW retirement, whatever that may actually look like. As always, thank you very much. Good night.